Good afternoon, all. Ira Epstein of Linn Associates with your agriculture update, and this is for Wednesday, the 15th of May, 2019. Interesting day in that the dollar didn't move much, the euro either. We didn't even move much in the metal markets, if you look. It was the stock market that got the bid today. It didn't do much for the grains. The markets that were the strongest, which had been the corn and the wheat from a technical perspective, got up to some key numbers. Their Bollinger tops ran into zones. We'll get there in a minute. Soybean complex rallied towards its 18-day average of closes. What I call that line in the sand sort of died down there. And interestingly, it was a day in the energy markets overall whereby the numbers out of the API and DIA were both very, very bearish, yet the market rallied because as soon as the U.S. told its non-essential personnel at our embassies, we have two areas there in Iraq, to leave, that puts the war bid into the market, if you will. So when we take a look at soybeans, we're getting a bounce. As you know, we had gotten down under the $8 area. Now we are up for the week, 38.5 cents. So this 814 zone is an important area, the last break low zone held in the marketplace. Now on the way up, the question is, where do you go? I still look for resistance on the weekly chart at the 886 3/4 area. That doesn't mean you're going there, but that is a resistance zone if the market were to reach it. When you go to the daily chart, what we were looking for was to fill this gap. I had mentioned it yesterday. I had mentioned it when the gap was left, that markets, especially grain markets, like to fill gaps. So the market yesterday made an attempt, and today you followed through and you filled the gap. As that gap was filled, it was just like hearing the air come out of a balloon. The momentum of the market started falling away. You had reached one of the targets. When we take a look at the swing line, you had gotten up high enough now where you've got a higher high and a lower low. It's not a trend, but you have stepped out of this downtrend line that you had. Maybe you'll be able to find a channel to it somewhere along back here, but I'm not seeing it at this point. Let's go back to yesterday. This is how the market was looking. Remember, it hadn't filled the gap. If it continued, one of the areas I'd look for the resistance is the 18-day average of closes. I was walking all over the office yesterday going, folks, who wants to bet with me at lunch? We're going to get up towards that area and sort of fizzle. Well, to make a long story short, we did this. We got right to it. That's where you fizzled. When you look at momentum with the chart, you're out of the embedded reading. You've hit the upside target. Often, what I look for when you lose an embedded reading, and embedded means that the two numbers that make up the slow stochastic are going sideways under 20 or sideways over 80. It changes from oversold market to locked in a trend, and when you lose that, you've taken away all that pressure in the market. So markets look for a natural spot to go. I think the 18-day average, and that's one of the things I teach in my charting course, is one of those natural spots. Look where the market went and stopped. If we take a look at meal, let me put it to you, this is yesterday. You lost the embedded reading and you got there all at one time. What number did you fall back to today? You got way above it. What'd you fall back to? Again, the market's trying to figure out what to do and it's not trending. So that takes us to the soybean oil. And in my morning subscriber video, one of the things I was telling traders as the market was here, I'm going, folks, I'm looking for these markets with this lost reading to kick the market up. It's not a dramatic move to the upside, but I'd be looking for the 18-day average of closes. And let's see, you missed it by 2 ticks today. I'll call that a home run. You're close enough. Momentum gone, trend gone, you now have to enter another side of this market. So I think you've broken the trend that was to the downside in the soy complex. You are not in an uptrend, you're just no longer in a downtrend. Now when we go to the corn market, this was yesterday. So I see 2 possible resistance areas if, I'm not saying they have to go there, if the market rallies further. The upper Bollinger Band, because 95% of the time the market will trade within that band, and if that's exceeded, maybe the 100-day average. You made your run. You finished the day out at 369.5. The upper Bollinger Band is 374.25. Couldn't quite make it to the 100-day average. And now the market when it reopens tonight, might very well have a reading in the slow stochastic of a 70, which is overbought. This is a rather sharp move. Caught all these people now that everybody here that went short under the market is behind money at this point in time. That's another way to look at what went on. In the wheat market, this was yesterday. I realize it's not a lot to say you're going to hit the Bollinger Band, and yesterday's high was 450 3/4. The Bollinger Band was 451. As far as I'm concerned, they hit it, and the market went up to just prove it and back in. I expect more sideways action in this right now. In the sugar market, as I see the sugar market, unless you lose this embedded reading, which it wasn't lost, if this market starts down from here, this was the bit of the correction, take out 1166, watch out, you might be going to the lower Bollinger Band. Take out 1215, you probably lose the embedded reading and head on up to that 18-day average, so an important zone in the market. In the coffee market, one of the things that I'm noticing in the coffee is what? In this coffee, as we're all watching what's going on, it's fighting at that 18-day average. And that 18-day average is the problem. The trend is up, but notice on the settlement, 91.30, you're still under that 18-day average of closes. This market needs to get up and over that, stay over it, and that gives you the possibility maybe to get finally some short covering, get the shorts nervous in the market. There's no reason right now in this formation to be short this market anymore. The question is, can you get long the market? In the cocoa market, let's look at yesterday. One of the things that we've been talking, if you go to my current videos on this, I said we're fighting a battle between the 100 and the 18-day average. If the market from here can take out 2282, the possibility then exists for the market to make a run to the lower Bollinger Band. Conversely, if the market can get back over this high, right that I'm pointing at, maybe you're going to get up here. You're at an important zone right now. What the market did today is it dove into the lower band, came right back to the 18-day average. You're out of a downtrend. You're not in an uptrend. You now have the lower low, and with today's high, a higher high. Do you have a reversal day? Absolutely in the marketplace. You made the lowest current low, came back and closed near the day's highs, and the settlement, was it over the 18-day average? No, it settled 2 points under it. It's fascinating to see some of this work. In the cotton market, like sugar, until you lose this embedded reading, all you've done is in this particular market, after this big break, you're getting a relief rally to the right-hand side of the Bollinger Band, and so far no more than that. In the cattle market, you have a lower low, higher high. What did I say to you? Each day rules the day. If you have an embedded reading, I say that the pros are selling the market on each bounce in it, like you had here. You didn't get much of one today. You did close higher. But until you lose that, I say that the market will find the sellers more willing than the buyers. Plus, the bias is down. You're under the 18-day average of closes. The same goes for the feeder cattle. Even though you're not in a trend via the swing line, you've got a higher high and a lower low. This is what rules the day on the hierarchy of indicators as I teach them. That doesn't mean I'm right. This is just the way that I interpret it. That's the strongest one when you have the embedded, and it tells me that the rallies should be short-lived. In the hog market, you're correcting an oversold condition. You're trying to establish a swing line to go to the upside. Now, if we look here, the low on this day was 87.75. This day's low was 87.85. So you have a lower low, and you got to say, do we have a higher high? And that's the only one I know how to go with it. It's sort of strange right here. Maybe you can even say you're still in a downtrend, but that's how I'm looking. Again, take a look. Here's 87.85, 87.75, and the market back up. I have this arrow wrong. This arrow should be pointing down from right there. That's me. I'm wrong on it. Even though you're climbing back up, and here's why I did it. Do you see this day? The higher high. I'm really not wrong. That I just looked at it. Why? You got the higher high and now those lows. You got to fight that battle. The lower low, higher high. No trend. You put it together, you try to figure out what to do, and you realize it's a pretty crazy time. One of the things that I'm able to do in my morning subscriber video, if you haven't seen this before, my morning subscriber video is very different. First thing in the morning, roughly 6:15 in the morning, I start recording, and that's Central Time. 40 charts on futures and typically five ETFs. Some of you are writing for me to add more. If I can get some time, I'm gonna start adding a few for you. But as you look at this as to what it's doing, the charts will look different than the ones behind me. Number one, I think the colors are easier to read, but that's because it's the screen that I'm using on, and I want to point out certain things. There's more lines on this than before. I will cover the markets in this sequence, and yes, the metal markets will be in there. We'll make that fix. We're so close to this, we don't pay attention sometimes, or you see it and your brain thinks it's there, it's not. But I can talk to you at that hour. Chart action, what I think the pros are doing. I'm going to bring up everything at that point. I've already read. I can tell you what's going on in Asia. I can tell you what's going on in Europe. Remember the time differences. We don't get in America our reports typically released on the economy until 7:30 a.m. at the earliest. That's Central Time, and then they go out probably to 9:30. So I'm giving you what the market's looking for, and then I can throw out, I want you to buy here, do it at the market, sell here, put a stop right here, do that. I can't do these in the videos that you see here. And yes, it's a subscriber video, and that right away makes you scared. It's expensive. It's designed to not be expensive. The cost for this is 26.5 cents a day if you want to take a look at it for 30 days. No contract, no commitment that way. If you decide you want to stay with it on a month-to-month basis, it's $15 after the first 30 days, or you can buy a one-year subscription for $156, which works out to be about $13 a day. How do you find out more about it? Well, you can either call my staff, they'll help you right there. You can go to our website under the words research or education. Go to morning subscriber video. It's all explained. 26.5 cents a day. Take a look at it. I'm Ira Epstein. You have a good day.